Hello guys and welcome to another post-market analysis of Bank Nifty. This is Bank Nifty short and 5 minute time. This is today's projection of Bank Nifty. But before we start with the analysis of today's price action, let's start from the daily chart as usual and see how the Bank Nifty is likely to perform for tomorrow. Okay, so here we have the daily chart of Bank Nifty. So here you have seen that by this candle, this is today's price action of Bank Nifty on December 18th, and here by this candle you can see that we have seen a gap down opening and we have seen a close below the open of it is of course far away from the previous working days Bank Nifty is close, but it is also lower than the previous working days open. So this itself, imagine that if the Nifty sorry, if the Bank Nifty, if it is from that close to this opening to this close, it's looking very bearish for around 280 odd points. So this is a kind of negative situation on a daily time frame. But if it is coming down, what are the levels for the Bank Nifty to keep an eye on. So all these levels are going to act as a, support for the Bank Nifty. All these levels are going to act as support for the Bank Nifty. But in order to be bullish, you should see a close above for this high because that's the all-time high of Bank Nifty ever. So on a daily time frame, you should wait for the swing high and the swing low to form, and then uh, mark your resistance and support areas and then act accordingly, take trades accordingly. So but here on a daily time frame it's looking a bit negative because of this bearish candle. So we don't know whether it is going to sustain this bearish momentum by uh, closing above this point and again going to all time high. Excuse me. Yeah, so that is about the Bank Nifty. And coming to the Nifty daily chart, and here we have the Nifty. And Nifty here with the today's price action was very tight, and you can see from today's price action right here, you can see that this has given us a candle formation which is called an harami pattern and also called as an inside candle formation. So now these levels is are going to be very important now. So we don't know which side it's going to take the breakout. So if it is taking the breakout towards the downside, then you can expect Nifty to come back and see some healthy corrections. If you talk about swing highs, and this is the major swing high, which is definitely going to take some time for the Nifty to react with this and see either to form a bullish price pattern here on a daily time frame, or whether it is breakdown. In both the cases it's going to take some time here because it is the previous swing high. But in between that you also have gaps which also are going to act as support for the Nifty. If it is coming down, see all these levels, see all these zones, okay, are going to act as a support for the Nifty. If Nifty is coming down, so it has many hurdles to pass if it has to come down in the Nifty rather than Bank Nifty. So but if we want to take trades towards the upper side, then this level all time high of 21,480 is going to act as resistance definitely. And after beyond that too, we have another round figure that is 21,500. It's another milestone for the Nifty to reach. So even that level is expected to act as resistance. So please trade carefully while trading Nifty because you have lot many hurdles in the Nifty. But this is definitely not a sign. This inside candle formation is definitely not a sign for a Nifty uh, to think that it is continuing its rally. So it's a kind of pause in the rally momentum. So you should wait and see whether the movement is towards the downside or the upside. Again, it's very simple in the intraday markets. If you have patience, if you have patience, you just have to wait for the swing high and the swing low, and then wait to create your own support and resistance levels so that you can take trades according to those support and resistance levels. So now coming back to the Bank Nifty chart, let's go to the 5 minutes chart and see how how are things in the Bank Nifty today, and see what we can take from today's price action and see what we can learn from today's price action of Bank Nifty. So to this is a perfect opening because see here you have that as open at 47,000, sorry, 48,000, around 60 levels, and then immediately you have seen Bank Nifty, we have observed Bank Nifty is coming down very rapidly. In fact, it has engulfed many candles on the left. If you see, that's the real body of the first candle of Bank Nifty today on December 18th, which has engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, almost 13 candles towards its left. So the candle was that massive. So whenever you see first candle as a massive candle like that, whenever you have a massive range of in the first candle in any instrument for that matter, then traditionally, according to textbook rules, that day has to be towards the sideways. In rare scenarios, you can see a trending day happening after seeing a candle like that. See here, here next two candles are the inside. See, this by itself is an inside candle formation, and this is again another green candle, that's a bullish candle. So first three candles are not in the same color, which means that we have to be a little skeptical about it today. And it is expected to be sideways, because earlier you can see the kind of trend, you see the kind of momentum that the bank Nifty has created. Okay, starting from there, it has rallied so much in the last a working day. So after seeing this much of the rally, it is definitely healthy for any instrument for that matter, if not Bank Nifty, to see a sideways action, or at least some pullback correction towards the downside. And that is what has happened today. But this is very important, because after this, we don't know which side is the blowout is going to be, whether it is towards the downside or the upside. For that, you have to wait and see what's going to happen in the tomorrow. But all that you need to do is know your levels. Okay, know you where you are in the market. See here, for example, after this reaction, we can safely draw that this has our support, because at this level, you know that this is a swing reaction, and because it has opened at this level and immediately has seen a momentum like that, so this obviously is going to become a resistance. So now all you have to do is wait for the Bank Nifty to further form swing highs and lows, and see how the Bank Nifty is reacting to those especially. So here you have another small reaction. Okay, here you have another small reaction after, from where the Bank Nifty has seen again a certain a bearish force towards the downside. And then see, this is an engulfing pattern, but this is not touching the support. So this is the candle that is touching the support, but here you can't take a trade, because this is the first reaction, right? So if you take a trade there, this reward to this risk towards the bottom is not playing great. Let me show you. So here, if you are entering, so your first reaction is that towards the target, and your obvious stop loss should be there somewhere towards the downside. So it's not a great place to take a trade, because it's not giving you a proper risk versus reward ratio. That is the same case here, even at the 10-10 candle. So even though this is looking bullish at the support, but it's you have all these reactions on the left, so it's not a great trade. Here you have seen a breakout towards this is a swing high, and this is a minor resistance, right? So here you have seen a breakout towards the upside, but after that, you have also seen a confirmation candle. Many people would do a mistake here by assuming that, yeah, this is a true breakout, and then take a trade there with this as your stop loss and this as your target. Yes, of course, this is a true breakout, but this is not the true swing high, because this is your real reaction for today. Because you see, the Bank Nifty has opened there and kind of immediately seen that rush to go towards the downside. So this level is important now. So now, if you want to enter there, and this as your risk and this as your stop loss, then that's definitely a foolish trade. So because this is already there as a resistance level, now looking at this particular red candle, now you can take a trade towards the downside. Okay, because you have an excellent risk versus reward ratio here, because that's going to be your risk, and your initial target would be at this level, either upper level, or the bottom level of this particular zone, because the zone is very in terms of width, it's very less. So this trade worked, and it is it is 2.1. That means your risk versus reward ratio is 2 times, which is great. Okay, after that, your next reaction would be this, but that didn't reach in the market. So you would have taken your those who would have trailed their stop losses, okay, to cost at this level, and then aim this target. While coming towards this target, your stop loss should have been here. So yeah, so you have seen only, let's assume that you have seen only this much of the moment in the Bank Nifty in that particular trade, which is 70 points, which is good and great to start a day. to start a uh, to start a transaction uh, in an intraday moment like that. Okay, so now here you have again seen a breakout towards the upside, and again you have seen a bearish candle there, and again you have seen a bullish candle here. See, from here it started to really kind of ignore the fact that this is a level. Okay, so whenever you see prices zigzag crossing, okay, whenever you see prices whipsawing the same level and multiple times, that becomes invalid. That level, the significance of that particular level will lose its power to uh, give support for that price or resistance for that particular price. So in that case, that is what has happened, and at around this level, okay, around 11:30, 11:25 level, by now you know that prices are holding this level pretty much, and then this level is also holding up this by this time, by around 11:30, you know that even these levels are holding up. So you could have drawn something like that. Now you look for the opportunity. Okay, see here you have an inside candle formation, and this could have been a trade if you see a momentum towards the downside, and keeping this as your stop loss. Let's see whether that has a proper risk versus reward ratio or not. Yes, looks like your stop loss is that, but your target could have been only that. Yes, in this case, it is your risk is equal to the reward that you can achieve in this trade. And yes, this could have been a potential trade. And here you have seen another 32 points of momentum. So here you have 70, and here you have 30. That's 100 points of momentum till now. Okay, here you have seen again a breakout towards the bottom, and we have seen a failed breakout because we didn't see any confirmation candle. Here you could have again taken a trade with this, or this as the targets. This is reached, but this is not. Again, if you are entering a trade there, this would have been either no profit, no loss trade, because prices have again started down. But if you are taken out your profits from that point to this point, again this is a momentum of say, uh, excuse me, again this is a momentum of say 22 points. All right, so but we are ignoring the fact that we are going to take a trade there. So here we have seen again a breakout towards the bottom side with a proper confirmation candle. Okay, so now this can be an excellent trade option, because here you see that. Okay, with your where should be your stop loss? Your stop loss should be at least above that. And where should be your first target? Your first target is exactly there, because that's the reaction on the left. Okay, so now you see risk versus reward ratio is not great. But what happened after this? Okay, but what happened after this is prices have slowly started coming towards this level to check this level again. So whenever you see a level, see, suppose you want to take a trade there, but your risk versus reward ratio is not great, right? But in this case, when the prices are there, okay, at this red candle, if you notice, okay, your risk versus reward ratio has suddenly increased to 2.74. Or if you're targeting there, because by now this has created another swing low, okay, your risk versus reward ratio is still more than 1.5. So if your risk versus reward ratio factor is more than 1, then you can definitely take a trade there. So in that case, this is a trade, and after that, if you're someone who is trailing your stop loss and targets, you could have taken your trade till this position, and then after this you could have waited for the prices to reach this reaction, but that didn't happen. So on the way back, you could have taken your trade, you could have exited your position somewhere here, which is 45 points. So we already have 100 points in today's account, and this is another 45 points. That's 145 points. And see what has happened next. You have seen another bearish engulfing pattern right at this important level, because we have marked that level from the earlier price action today. So again, here the risk versus reward ratio is not great, but if you have waited, okay, this is where you have seen a red candle. At least here you would have entered, but by now here at 2.5, you have seen another swing low there. So you could have waited again, to see to achieve that proper risk versus reward ratio. But at this point, at some point, you know that this trade was not taken because of risk versus reward ratio. But at some point, your prices are so close to your stop loss, okay, but they have not seen a close above this, but they have come so close to your stop loss. At least here you would have taken a trade, okay. That is very less risky, because if you see a close above this, we can exit. If you see a prices going down, then you can sustain. So in that case, those who are really paying attention towards the market could have taken trade somewhere here, or if they have taken trade somewhere here, they would have added some more points, some more lots here, which resulted, okay, let's assume that, okay, you have taken trade somewhere here in between. Okay, so this is not a stop loss. Okay, you don't exit from your position if you just see a price is coming till there. You will only exit only if you see a close above that. So here in this case, it has reached your first target, it has reached your second target. Okay, by the time you see the close of the bank nifty, it has also seen your last targets hit, which is 120 points. So here we have 140 points earlier and 120 points now, which is 260 points of movement in the bank nifty on a sideways day, which is which should be an excellent joyful day for any trader. Okay, so that is how you you can trade. You could have been traded today. So those were the opportunities what we have seen. So so to know all this, understanding uh, what market is saying is important. You can understand the language of the market is through candles and candlestick patterns. We do have candlestick pattern videos in our candlestick pattern series. I request you to watch if you want to have that extra edge towards the market. Okay, so that's it in the bank nifty 260 points, and see what nifty has to uh, offer for today. Let's see what nifty has got today. So yes, this is a nifty chart. You can see that this is very tight because um, from the daily candle itself, we have seen that range is very, very, very close. Okay, so this is actually the real body's range, and this is the whole range of nifty, which is very tight. Okay, but still, if you notice, okay, this should have been your first support level for the nifty, and then which really held up towards the end, which didn't break, and this should have been your initial resistance level in the nifty. Anyway, in this case, here you have seen a breakout, but let me come there. Yeah, here you have seen a breakout with a confirmation candle, but you don't see a proper risk versus reward ratio here visually. But let's check it with the proper. Let's check it in a proper way. So that could have been your profit, and this could have been your loss. Yes, yes, it's not a great risk versus reward ratio. So here you have seen again, prices, this peak again would have become your second resistance area because of the peak that it has created towards the upper level. And here you have seen a engulfing pattern, and there you could have taken some trades with this as your first target, this as your second target, this as your third target. Okay, so all this definitely worked. So a real opportunity in this case in today's Nifty is definitely this location. You could have definitely you should have this trade should have not been missed if you are paying key interest towards the market in when it is live. Okay, so that pretty much worked towards the downside all the way towards this level. All right, so that's it for today in the Bank Nifty and Nifty. Hope you have understood something, and how really the price action and candlestick pattern works, and how swing in highs and lows are very important in everyday trading. So marking those points is definitely a very key to, if you are a price action trader, then these points are definitely going to help you in the live markets. That's it for today. Thank you, and see you in our next video. If you have not subscribed yet, I request you to subscribe so that you don't miss any of our post-market analysis of Bank Nifty and Nifty, and also some technical analysis videos. We do have an exclusive playlist for the candlestick patterns, and we have started a new series called Strategies and Tips, where we have started discussing about strategies. So stay tuned and see you in our next video. Thank you.